Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the psychology and the reasoning behind the moves today so we can better understand tomorrow. And today, we're going to be taking a look at the S&P. Now you'll notice there aren't any arrows on the chart because we're not going to go over each individual setup. I want to instead go over this range as a whole. This is something that a lot of traders really don't trade correctly. Ranges are one of the most tricky things to trade, which is funny because the market is ranging most of the time, right? So getting comfortable with ranges and understanding how they work, it's a very important aspect to trading intraday charts or really any chart in general. So first of all, we have to understand when we're starting to range, and we really need to pick up on that, the sooner the better, because the sooner you pick up on a range, the less in terms of the amount of mistakes that you're going to make. Very frequently, if we look at this type of chart, we can see that buyers very likely attempted to get this to break out. Buyers tried buying the breakout here, and it completely collapsed. Sellers then come in and try to get the breakout to go lower, and maybe even right here, with buyers thinking, well, they got trapped in here, let's turn around and sell it and drop it lower. This should definitely break out. And that fails. We then start going in the opposite direction. Strong bull candle, a lot of failure at the bottom. This has to break out. And that one fails, right? So it's a very common thing to see, and it's really easy to get caught up on the wrong side if you're not careful on these range type days. First of all, we need to break it down and figure out, okay, well, when are we ranging? Well, try to break it down and look at it in context. Very small gap up, and we gapped up inside of yesterday's movement. Along with that, the first candle of the day, very weak. It might as well just be a doji. It has a small bare body on it, but there's a bunch of wick on the top, a bunch of wick on the bottom. Not very convincing. When the buyers try to take over and prove that this is going to be a bull breakout, the follow-through, the continuation of the buyers, completely falls apart. Now, this is where you start thinking, okay, let's put this in context. We have a doji to start the day off, a bull attempted breakout, and a complete failure. If the bears try to take this lower, the best that they're going to be able to do is maybe get back to the lows, and that's probably about it, right? So now we switch gears. On the third candle of the day, we know what's going on. Now, sometimes it doesn't happen that quick. Maybe it takes a little bit longer. Maybe you want to wait to see what the reaction is. If this is going to be a range, you should see buying pressure down at the lows. It pushes down, big wick at the bottom. That's your clue. Something is now wrong. We are now completely confirming the fact that this is a range. The next time it comes back to that low, you're very likely going to see buyers that pile into the move and disallow sellers to continue back down again. And even if the sellers do manage to go a little bit further, there's now likely just going to be a bunch of buyers waiting underneath that low to pick that market back up again. The same thing goes for the highs. Now that we're cycling off of the lows, we're coming back to the highs. What are we looking for? Well, obvious swing high, obvious swing high. There are very likely going to be a massive amount of sellers above both of those, just waiting to get filled. Now, you have to remember, these are the types of sellers who are going to be scaling in. They're going to sell some here, they're going to sell some here, they'll sell some here, and they'll sell more there. They're going to be scaling into positions. It's not easy to scalp this type of scenario, but understanding where you are and waiting for just a little bit of confirmation. They fail to close outside of it, the retest fails to close, now you have excess confirmation, and a boatload of sellers will dump into that area to attempt to drive the market back down again. So those are the types of clues and things that you're looking to pick up from the market. Does the context make sense for us to be in a range? If we are in a range and the context does fit it, where are we? You want to stay out of the middle. You don't want to be trading in the middle. That's the wrong place to be trading. You want to be looking to fade the extremes because that's where you're buying low, you're selling high, and you're staying out of the middle. More often than not, when you're in a range, you're much better off looking to scalp. You're not looking for big runs because there's not room for a big run to happen, right? Now, every once in a while, you will see a range, something like this, that breaks out and it does actually run. But don't let that jade you, right? Because look at the move prior. If we look into this move and say, well, okay, yeah, that was a successful move and it worked out perfectly. Right, but this one failed, that one failed, that one failed, This one maybe not failed, depending on what your targets were. So it took 4 times wrong to get the 5th one right. Okay? The probability just doesn't make sense. And that's one of the biggest things that traders will get wrapped up in, is seeing this big move and getting all juiced up and wanting to catch that next big move when they could have easily taken 4 scalps and made the same amount. Okay, so that's what we're looking at when we're talking about ranges, and they can be one of the most phenomenal days of trading that you can ask for, provided you trade them correctly. So hopefully this gave you a little bit of an insight on how to treat ranges. In this case, it was on the S&P. Hopefully you found it useful, hopefully you found it entertaining, and maybe you learned something. And otherwise, we'll see you in the next video.